90% of retail traders lose money. It's not because they don't know how to read a chart or understand a moving average. They lose because of what happens between their ears, the very moment that real money is on the line. Your brain was built by evolution to keep you alive, not to size positions in the stock market. When you are staring down a massive financial drawdown, your amygdala actually hijacks the rational decision-making part of your brain. You are biologically hardwired to react to threats, which makes logical decision-making nearly impossible in that state. You can't turn off these biological responses. You can build a physical system so your feelings don't get to make the decisions. We are going to build a personalized trading discipline contract right now to override those biological flaws. Grab a blank piece of paper and a pen, or simply open a new text document on your computer screen. We are going to build this together, step by step. Creating a physical, written document is the critical first step serious traders take. If your rules aren't written down, you're just trading on emotional vibes, and vibes do not survive contact with a red candle. Let's set your mathematical limits first. At the very top of your document, write these two things: max risk per trade and max daily loss. This diagram shows exactly how to calculate your limits. Take your total account balance and multiply it by 0.01. That 1% is your maximum risk per trade. Your daily loss limit is 3%. Calculate those numbers and write that exact dollar amount down next to your headers. Now look at that dollar amount. If losing that exact amount makes your stomach top, your position size is wrong. Losing a single trade should feel like a mild shrug. If you are checking your phone every 10 seconds while in a trade, your risk number is too high. Correct position sizing is your ultimate emotional regulator. When you fix the math, you instantly eliminate half of all the psychological problems you face while trading. Next, add your first hard rule to the document. Write, I will place a hard stop-loss order the moment I enter a trade. Staring at a losing position and hoping it comes back is a biological avoidance of pain. Hope is not a valid trading strategy, and it has no place in your system. You must set a predetermined invalidation point, a specific price where the trade idea is proven wrong, and you have to put that in as a hard, automated stop right when you enter. Relying on a mental stop-loss is a fatal mistake. When the market turns against you, the pressure ramps up, and you will convince yourself to hold just a little longer. You have to lock it in so the system executes the exit for you. Your brain will always try to negotiate with a mental stop. It cannot negotiate with a hard, automated order. Automating your exit completely removes human intervention from the equation. Now, skip a line and draw a 4-column table on your document. Label the columns ticker, setup, PL, and emotional state. Most traders use a standard journal that only tracks profit and loss, which is largely useless for improving your behavior. This chart shows the professional version, designed to capture your internal feelings right alongside the math. Writing down how you feel before you click buy is the only way to reveal invisible, destructive patterns. You will start noticing that you lose money every time you trade angry, or when you force a trade to get revenge on the market. Below you journal, draft a 3-point pre-market checklist. 1. Check daily plan. 2. Mark key levels. 3. Mental rehearsal. Running through this pre-market checklist shifts your mind state. You stop reacting emotionally in real time and start calmly executing a plan you've already committed to before the market even opens. Finally, write this mandate at the bottom of your page in bold letters. A winning trade that breaks these rules is a failure. A losing trade that follows these rules is a success. Now you must physically sign your name underneath that final mandate. This forces the concept of process over outcome. A trade is successful because you executed your plan perfectly, entirely regardless of whether the market moved in your favor. If you move your stop loss and end up making money, you just secretly taught your brain that indiscipline gets rewarded. Repeating that bad behavior will eventually wipe out your account. Signing this document represents a physical surrender. You are giving up the need to be right on any single trade, shifting all of your focus to flawless execution. Look down at what you just built. You now possess a completed professional trading discipline contract right in front of you. I want you to take this physical document and tape it to the wall immediately next to your monitor. It needs to remain visible every single time you sit down to trade. Here is your ultimate challenge. For your next 100 trades, Your sole job is to execute exactly what is on that paper. Give your statistical edge enough time to play out without interference. A great technical strategy simply gets you into the arena. Your psychological framework decides whether you survive it. If this framework helps you, hit subscribe and drop a comment below with the one psychological mistake, whether it's fear, greed, hope, or regret, that you are going to use this contract to fix today. I read every single one of them. See you in the next video.